Hi, and welcome to the Market Alert, or should I say the Twilight Zone, for Friday the 6th of November. So more QE hopes, sparks big tech, Bitcoin and bullion bid, but smart money is dumping. Can't stop, won't stop, until, of course, the interest on the debt is so great that they can't print anymore. But then they'll probably find a way around it and go negative all the way. So you have to pay for the privilege of supporting the government bond buying program. Also yesterday, this is why I say the Twilight Zone, the UK, another 150 billion in support for the economy. Just don't shut it down. That's all you need to do. It's not rocket science. But no, we're going to print more, another 150 billion. And now I think there's a clue in this next slide here, where the furlough scheme is extended until the end of March. There's either one of two things here, that Bailey from the Bank of England have said, look, I've got a few quid here, 150 billion, let me just put this on the credit card, and then you can print till, or not print, but you can pay the furlough until March. Either that, or there's a subliminal cue here that this lockdown doesn't finish until March, because they're going to pay the furlough until March. Either way, you decide. So yeah, very interesting day yesterday, and of course we've still got this going on as well. There's no end in sight at the moment of the US election, which leads to uncertainty in the markets, although the uncertainty seems to have been to push the market higher, and that's probably because they've got something then to let it fall down with once it goes. Okay, so let's have a look, see what the market did yesterday. We had some news. There was a whole stack of news for the UK, all coming out. The actual was not too far off the forecast, so nothing really major there, but enough to allow the markets to move to the upside. So prices opened, they moved slightly lower. In fact, I'm just going to wind back here because you probably saw that flash on the screen. As the market opened, I went and had a look at the daily chart, just to see where the next upside targets were. Was this one here at 89% of the daily chart, from this high to this low, just to see where prices, in fact it's not, it's this this high down to this low, and this was the next upside target, as the market was already at the 78%. So I drew this in. You can see the line there. I did actually change the colour to a lime green just to make it a bit easier for you to see. The market found support immediately from the BRN and then started to move to the upside. There you go, there's the changing colour. So that's the 567 from the daily chart. And of course, price is moving to the upside, even given the uncertainty, not knowing who's actually won the US election. Prices come back down to the 20-bar moving average. Get some potential weakness here at the R1, which we can see there. Prices then sideways to lower at this resistance at the 78%, and then we get a potential sell signal with prices filling this trade very quickly, and prices coming off the low in this bar with an increase in volume right down at the scalp level. On this particular trade, and given that all shorts at the moment until the US election is announced, there is the prospect of a market turning around very quickly and moving to the upside, irrespective of which candidate wins, because that's the way it's going to work. So prices try to move back to the upside. You can see already I'd moved the stop down to break even and was taken out as the prices completed there. It was just there was the combination of this increase in volume, prices coming off the low, and the prospect that they could announce a winner of the US election. So as prices started to move lower, I moved the stop to break even, but was taken out as prices came back, which seemed to be the right thing there, as they reversed and then started to move back to the upside. We had a buy signal that was nearly taken. Thankfully it wasn't, and then prices reversed, but it didn't. Already we've got this sort of trend building here. You can see it through there, and prices making their way back to the upside there, which you'll see. It went choppy for a while. And then we had another sell signal. This time the market, again, as soon as it was filled, it was holding. But look at across here, you've got all of this support in this area. So it was going to take a lot to get through this, which it eventually did. As you'll see, prices go through in just a second. So we'll move forward. But no sooner are we through, they buy the market back again. I've moved the stop to break even. And as soon as prices close back above the 5-bar moving average, which they do here, it's just a matter of taking the profits off the table. Prices then trade sideways. We get the green test. So we got that pullback there to move to the upside. And then prices, as you'll see in a moment, retest at the BRN before moving higher. Very choppy yesterday, was up and down quite a lot, 10, 15 point, 25 point bars as it tried to get its own direction. Prices then traded to the upside as we headed into the news. Prices going just through to the BRN and scalp area there before we had the economic news from Europe, which was there. And of course Bailey was speaking at 9:15 as well through the choppy part of the market down here. And of course, once he'd launched his QE, that was it. The market was free to move higher. Meanwhile, in the afternoon, as we move forward here, prices once again having a look just to see where we were in the bigger picture. We still hadn't reached the 89% from the daily chart, so I always check, see where we are in the bigger picture. Once again, prices moving off the 200 MA, the R1 nicely through this, and then continuing to move, even though there's potential weakness along the way. Prices continue on the upside. It's a bit of a struggle at the BRN, and then trade back to the downside. As you'll see in a moment, we get really close to that level, and then we go through it. And then prices decide to come back, having hit the 89% in the daily. We then get a short, and this is a quick trade, because watch this bar now, watch the volume build in this one here. And as soon as this started to do this, it was a matter of get out. And there's a reason for this. If I can find, I did actually put it on screen. Let me just wind back here. There it is. I've just seen it. The second reason why it was short-lived is Trump was to make an announcement, and that being the case, it could send the market to the upside. Like I say, there's a bit of a problem with being short at the moment unless there's momentum to the downside. So the increase in volume there as well was a bit of a worry. So it was a matter of, do you know what, I'll get out of the trade at this point. I wouldn't normally, but like I say, we've got this situation at the moment where we don't know who's won the election, and whoever wins, the market is going to scream to the upside. There's no other reason why not, because it's going to be loved by the market because you haven't got the indecision. It's not about favouring any particular candidate, it's about the indecision has been removed and the uncertainty has been removed from the market. So prices then made their way back up to the recent high, and also to the 89%, which I drew in first thing yesterday morning from the daily chart. So let's have a look overnight, see what we're doing. This is the Dow. At the moment there's a bit of weakness at the 78% retracement in the Dow. And more importantly, let's have a look at the daily for the DAX, and this too also sideways. We've gone up over 1,000 points from this low to this high, stuck at the 89% in the daily from this high to this low. So again, and also finding support at the 20-bar moving average. Could we move higher? Absolutely. If we get an announcement of whoever's won, we're going straight up. Because, as I said earlier, the uncertainty has been removed from the market. Also note in the overnight as well, I'll just shrink this a bit and we'll go back over. You'll see that prices are favouring the DP level at the moment as well, finding resistance at the 200 MA, but down here you can see the DP level, daily pivot, has got major support at the moment. Had to drive through the 200, but then the 200 became support as well as we head towards the close of yesterday as well. And just doing that as I record. So yeah, it's turning around from what seems negative overnight, the market finding support at the DP level at the moment to move to the upside. And they're going to keep doing this, I would imagine, until they get the result of the US election, and after that they can then decide on what the prospects may be and what the economic policies are going to be of the individual and how this will impact as well. Just going to draw on from this high down to this low a new set of fibs as well, just to see where we could end up with some more resistance. So we've got this would be the next upside target, which actually ties in quite with this high as well, where we saw some selling coming into the market just in case. So if you get profits at that sort of level, then consider actually taking those profits. So that's the sort of upside targets for this market. Of course it could reverse as well and head south, but we'll see how that pans out. It'd have to take some serious news or negative news to do that, and that would be the downside targets if it does. But we'll have to break the DP in the 2 minute if that's to be the case. Okay, let's have a quick look at a few other things. The implied volatility dropping sharply again. We're down at 22 from a high of 32, so down significantly. And also we're green across the board now again on the implied, which again is pointing towards the upside for the market. Meanwhile, news today, let's have a quick look, see what we've got. It's non-farm payrolls today. These are out at the usual time of 1:30 and forecast to be better than the previous as well. So if that's the case, then it'll be used to send the market to the upside. So just before we finish, let's have a quick look at the silver market. I still have all of my positions in this, as you can see here. No shortage of these. Been buying since we dropped in March down to $13 per ounce, and given the long-term prospects of this and the continuation of printing money and the increasing in global debt and the uncertainty and everything else that's going on at the moment, then you know it's just a common sense thing to actually hedge against what's coming down the line, where precious metals will obviously dominate going forward. And if not, and if we go all crypto and digital, there's going to be a massive black market for precious metals. That's for sure. So yeah, at the moment we've been consolidating. We had the initial move up in July, and prices then consolidated. We've had the shakeout, and then we've gone through the consolidation phase. At the moment we're just coming to the point where prices are likely to break out, but we've got this resistance here at 25.35 that needs to be taken out in order to then continue to move higher. Also, one thing that I would do on the longer term as well is fib retracements. Let's have a look at these. These are the sort of areas where we can expect some sort of resistance as well. We're just at this area actually, which is interesting, which is a 50% retracement from this high. But let's go back to this high and just have a quick look here as well. So let's draw in from, this is where the market moved to initially, up at the nearly $30 an ounce. It's amazing to think that the price of silver in 1979 was $50 an ounce. In 2011 it was $50 an ounce. But adjusted for inflation, it should actually be, from 1979 that is, it should be sitting around $600 per ounce. It's the most undervalued asset on the planet, which is why I'm heavily invested in physical, the spread betting, and also ETF funds as well, because it's just a no-brainer for me personally, given the debt, the global debt now close to 300 trillion. the destroying of the economy as well. And then, of course, we've got the World Economic Forum in the background, who wants to build back better after it's destroyed everything, using a virus that 99% of people recover from as the excuse to destroy it in the first place. And I can guarantee you this, I can even prove it, that the elite are accumulating gold and precious metals for that very reason, because if they're part of the Davos set, they will know what's going on. So anyway, coming back to the silver market and gold, prices consolidating at the moment, hopefully ready to break to the upside and take out that $28 level, or $29, and then through to the $30 per ounce. And when you look at the monthly chart, you can see that we really don't have much of a problem. We're still on the upside. Let's get rid of this and just squeeze this down a bit. This is the all-time high going back to 2011, but we also had this in 79 as well, when the Bunker Hunt brothers cornered the silver market. So we've been long from down here. We did run into problems at that $28 level, but not a problem. Once we get through $50, then it's $100, etc., etc. So yeah, everything moving in the right way. But silver does have long periods of consolidation, which you can see here from years ago, where we've got this area, even on the short side, it's months and months, and then prices breaking again. You know, on the upside, you can see how long these periods of consolidation can be. So, you know, just a couple of months is nothing for silver. It's just a matter of having patience. Okay, that will do it for today. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.